We have officially entered into the greatest war of our time regarding financial products. And the most significant war right now is between whole life insurance and indexed universal life insurance, aka IUL. And in this video, I explain why no one can agree on which one is better and why there's a war between the two. If you are researching and are confused about why half the people in the industry hate whole life and they love IUL and the other half hate IUL and love whole life, you are not alone. In fact, this is very common, and this is even my story. My name is Dom Rufran. I started in the financial industry owning and selling IULs and hating whole life insurance. Then, like most, I became confused, wondering if whole life or IUL was better and why there were so many different opinions. Then I let my IUL policy cancel and I got a whole life policy, questioning IUL's longevity. And now, after thousands of meetings, seeing thousands of illustrations, interviewing hundreds of experts, and a decade of experience, I decided that... you thought. Stay tuned to the end to find out which one is better in my mind. With that said, let's jump in with some common sayings that you have heard on both sides of the debate. Let's start with whole life lovers. IULs are risky. Why make insurance an investment? IULs get more expensive over time. Your policies can lapse. You can lose money. They need to be managed. The insurance company can change the caps on you. You take on all the risk as the policyholder. I'm sure there's more, but let's leave it there. You get my point. And now for the IUL lovers. Whole life is a scam. The returns are terrible. You can't get arbitrage. It's a horrible investment and it isn't flexible. The dividend can change on you just like cap rates. And the dividend is just a return of premium. You also get my point. So if both are saying this, who is right and who is wrong? Well, as the saying goes, there are always three sides to the coin. There's heads, tails, and then there's the edge. The edge is what is rarely discussed. So that is where the truth likely lies. To be frank, most people are extremely biased towards their belief system because they either own the product to justify their purchase or justify selling it to align with their ethical beliefs about doing the right thing. And let's be very clear, it doesn't matter if one is a whole life or IUL lover, not all, but most, do not have malicious intent or want to ruin anyone financially. They genuinely believe their perspective is the truth, so they are very passionate about their side of the coin, which I highly respect. So why does one promote, sell, or buy one side versus the other? Well, it starts with a person's experiences. For example, Dave Ramsey hates debt. He got burned years ago and lost tons of money using it. He now believes there is a much better way than using it. But the guy who is a billionaire using debt to build a real estate empire has a massive difference in experience and will tell you it's the greatest tool to build wealth. So if someone was burned selling or buying a bad whole life or IUL product, whether it lapsed, was with a terrible company, the agent was not knowledgeable, not right for them, misdesigned, money was lost, felt scammed, it doesn't matter if millions of other people had a good experience, their belief is it's bad. And I have empathy for these people. Besides experience, the other thing that shapes someone's belief is their influence. Most people can only see what is in front of them. If someone is a hardcore infinite banker and only sells whole life, they will instantly say IUL is bad because Nelson Nash said not to use universal life. On the flip side, if someone only sells IUL because that is all their company offers, then whole life is bad because their upline says it is. Other influences, your upbringing, social media, masterminds, and people you look up to all have a bias towards something, and you will likely lean that way. Just look at the 5 closest people to you. You probably believe 85% of the same things. Now that we have discussed people's experiences and influences, let's discuss people's knowledge and expertise, which causes the most significant wars in this discussion. Because people are naturally biased 99% of the time, they will learn more about one product over the other. Therefore, half-truths get shared when one talks about why the other side is not a good product. If you want to see a real-life example, I have a video of a client questioning a policy we got for him because his friend shared half-truths with him. The most prevalent place you see this happen though is when new people to the space educate on half-truths on social media. It can become a disaster. Then the other side gets emotionally frustrated and retaliates, and this side is intense because this is usually the passionate, experienced advisor. Trust me, I used to be both. 1, sharing half-truths, and 2, who used to get wound up when I would hear false information. Here's an example. An IUL agent will say, you can average 9% on your policy. Oh boy, the war has begun because this is a half-truth and the full story is not shared. Then you have an uneducated whole life agent justifying whole life insurance returns, saying that you can get a 6% return on your policy because the dividend is 6%, which is also half-truth. In the end, the half-truths are dangerous and factually incorrect. Neither side is calculating the expenses, the costs associated with the actual returns, potential changes, and risks associated with sharing these numbers. So the question is, why do people share half-truths and become emotionally passionate when this happens? Well, it comes down to one word: ignorance. People think they know something and share a black and white statement without knowing the truth. I know it sounds a little harsh, but it is true. Here are some common black and white statements that exuberate ignorance on both sides. I'll also share why they are half-truths. Whole life isn't flexible. Well, if it is traditional whole life, this statement is true, but it can be designed with lots of flexibility if one knows how to. IULs have a high likelihood of lapsing. Yes, an IUL can lapse, and many have, including mine. But so can whole life. If it's designed to minimize the death benefit, the client pays their premiums, and with a good company, the odds are practically nil to none the policy will. Whole life has no cash value and gets terrible returns. Well, if designed that way, it is also correct. But if designed for cash value growth and to maximize returns, it can be fairly close to an IUL. IULs get more expensive over time. Technically, yeah, that is also true. But the net risk also decreases as the cash value approaches the death benefit. The whole life dividend is just a return of premium. Well, yes, by definition, in the IRS code, that is correct. But why does that matter if you get a competitive return, have flexibility, get tax advantages, protect your family, and can leave legacy, and are able to accomplish what you really want financially? Would you rather have A, an IRS code named return of premium and accomplish your goal, or B, have something that is no return of premium and still not get what you want financially? The insurance company can promote these massive caps in an IUL in year one and lower them extremely low afterwards. Yes, technically that is true, but most prominent companies with a great track record would never do this. Then there's the exaggeration side of hype and marketing. A whole life policy with infinite banking will solve all of your problems. Well, probably not, as there are way more pieces to the entire financial picture, especially through your heart, mind, and other financial products that are needed to fulfill on this. Banks use IULs for bank-owned life insurance, and so should you. Okay, let's see the data. This product has barely been around for 30 years and has tons of variations over time. The banks likely haven't started touching these things until recently, if at all, as they want a product to be validated so that their money is safe. The most successful banks and whole life insurance companies have been around for over 100 years. Most of the time, you aren't going to teach an old dog a new trick. They have seen the results from their whole life policies, so it would probably take a lot for them to pivot. When you pay your whole life policy back, you pay the interest back to you. Not quite, maybe indirectly, as your expense payment goes to the insurance company's bottom line, increasing their profits and your long-term dividend. However, your interest payment is paid to the insurance company, not back to you. Well, Walt Disney uses IUL to build Disney World. Oh, okay. That was with whole life, as IUL wasn't around when Walt Disney was around. You are guaranteed 4% in your whole life policy. Okay, this one is where people just regurgitate what others are saying, because they would not say this without elaborating if they knew how the product actually worked. Policy guarantee rates are right now between 2 to 3.75%, as a few years ago, they were at 4%. But this represented a gross number, so it doesn't mean what it sounds like it is. You factor in expenses, costs, mortality, and consider that it takes time for your policy to even get a positive internal rate of return. The insurance math is very far from 4% guaranteed year after year. Okay, to wrap this up, you probably now see why it makes sense that no one can agree. There are just so many common misconceptions and beliefs around whole life and IUL. People are either ignorant, passionate, or a combination of both. And regarding my belief on which one is better, to be honest, I may sound more biased towards whole life in a lot of my content because I am more educated about it, but I have gained enough wisdom over the years to have a strong belief that there is no such thing as a blanket statement that one product is better than the other. Why? Well, because everyone's financial situation is different. Everyone's beliefs around money are different. Everyone's goals are different. Not two people are alike. Everyone's risk tolerance is different. So IUL may be better for one, whole life may be better for another. And buying term and investing the difference may be better for others. So my encouragement for everyone is to do your research and not believe everything you hear as black and white, and including this. Do your due diligence and find out what is best for you. If you want to know my thoughts on the differences between whole life versus IUL, you can watch my video called Big Difference Between Whole Life and IUL. And if you want help with getting the best life insurance setup for you and your family, just use the link below. We'd be more than happy to help be your life insurance expert, or quite frankly, answer any questions you have. Thanks again. Don't forget to subscribe. Have a good day.